So overall, we're moderately bullish. I mean, it's always great to have headlines where we're hitting new highs all the time, but we don't see any reason why that should turn around anytime soon. Corporate profits up 17%, even ex the corporate tax cut, so really healthy. That'll slow going into next year, but we think margins are still constructive. And then with a lot more cash in their pockets, companies are looking to increase buybacks. We think those will be about $1 trillion in 2018, increasing dividends. So overall, we're pretty constructive, though we're looking for signs of rising risk in the market.
Gary, you are particularly enamored with small cap stocks. Why?
Well, Tyler, primarily because earnings have been fabulous. Just this quarter that we're in, earnings in the small cap space have been up 48%. And we think in the next quarter, they'll be up 36%. So small caps have done well this year. A lot of M&A activity, margins continue to improve, and revenue's been up strong. So we're optimistic at the Hodges small cap on the market and small caps in particular.
A lot of optimism here from both of you. Kara, where do you see the headwinds? What are you paying attention to when it looks like pitfalls ahead?
Well, everyone's talking about trade wars, right? And so when you have trade wars, tariffs increasing, those are all sand in the gears of the economy. So that's definitely a headwind. But so far, we've only seen it really manifest itself in individual companies. When we look out at the broad economic measures, we still see companies hiring. CEOs say that they're confident, CapEx is going up. So companies with what they're doing are actually saying that trade wars are not going to be an impact on their overall plans. So that's something that we're watching closely.
At the same time, Reuters obtained a letter that Walmart wrote to a bunch of senators saying that they're going to have to pass on price increases because of the tariffs from China. I mean, Gary, let's say that consumers who walked into Walmart had to pay 10% more on a host of goods, from food to personal care items. What kind of sand would that be in the gear of the economy at that point?
Well, if prices are going up, more inflation, it's certainly going to hurt the economy. It will impact earnings to a small degree, in our opinion. The fact that these small caps are domestic, we don't think it will have quite the impact as it would the multinationals, and that's what keeps us attractive to the small cap space at the moment.
Kara, same question to you.
So I think more than just the trade wars, we're really looking at inflation. And so far, one of the big drivers of inflation, not just on the PPI side, but on the consumer side, is wages. And wages have been very slow to increase throughout this cycle. They're starting to pick up, and so that could be a concern as overall inflation levels are kind of bumping along the bottom of an acceptable range for the Fed. We're watching that carefully to see where potentially, increased tariffs or higher wages could feed into broader inflation. And again, so far we haven't seen it, but it's something that we're very aware of.